All right, and we're live. Thank you everyone for joining in for another informative session with the SECP. This time we'll be talking about the SECP Regulatory Sandbox. The session will focus on providing an overview of the securities markets, insurance, NBFC products in the Regulatory Sandbox. And I would like to call upon Amina Aziz, Director, Convener RSP committee to take the session forward and introduce the guests. Thank you so much, Amna. Over to you.
Thank you very much, Umair. Assalamu alaikum, everyone. I welcome you all on board. We at SECP firmly believe that tech-enabled solutions for our regulatory sectors have the potential to transform the way business is done. Fintechs can lead the way by creating depth in the financial services market, thereby facilitating outreach to the unserved consumers and population. Our Sandbox program has entered its third year. It was the first and is still only the Sandbox program in Pakistan. Before going into further details, let me first introduce myself and my fellow webinar hosts from SECP. My name is Amina Aziz. I'm a director at the SECP. I manage SECP's Regulatory Sandbox program as a convener, along with Mr. Muhammad, Adil, Latif, and Daniya, who provide valuable support to me. We are also joined by additional directors, Ms. Najia Ubaid, Mr. Aqeel Zeeshan, and Mr. Sajjad. Ms. Najia heads the Primary Market Development Department, whereas Mr. Aqeel and Mr. Sajjad look after the product development side of the NBFIs. Last but not least, we have with us Ms. Sabahat representing the insurance sector at SECP. Before we move forward, just wanted to let you know that we are having a Q&A sessions towards the end of the webinar. Our chat box is open now. You can send in your questions anytime during the presentation. These will be collated and answered in the Q&A session. I will now formally start the webinar. In the following slides, I intend to explain what a regulatory sandbox is and what is the objective behind the SECP's Sandbox program. As I briefly touched upon in the opening remarks, SECP has a strong resolve to adopt technology so that its regulated sectors can lead the way in introducing tech-enabled solutions for their customers. You will all agree that innovation comes hand in hand with change. Change is always a challenge for regulators. We are used to certain ways things are done. Our rules, regulations have grown up in response to the past technologies and experiences. Figuring out whether and how they apply to new ideas is a tall ask. However, technology's potential is too great, and the potential disruption it can cause is even greater for us to bury our heads in the sand. By means of a sandbox, SECP provides an environment that is superimposed to conduct testing of innovative products, solutions, and business models under certain terms and conditions applied the regulatory framework currently in place. Prior to launching the SECP Sandbox program, SECP studied sandbox programs run by the UK, Canada, India, Sri Lanka, and Australia. Our study revealed that mostly sandbox programs are run by either the securities regulators or the central bank individually or jointly. The objective or purpose of the sandbox are varied. It could be fintech focused, regulated entity growth focused, or unregulated entity innovation focused. SECP Sandbox is innovation focused and is a multi-purpose program. By design, sandboxes accept applications, allow testing continuously, or they can run on cohort basis. SECP Sandbox is managed on a cohort system wherein application windows opened once a year, and the qualifying group of applicants can undertake testing for a period of 6 to 9 months. Furthermore, globally sandboxes are either theme-based or general purpose. SECP runs a theme-based sandbox. Themes of each cohort is announced at the time of the opening of that particular cohort. Having said that, the applications other than the announced themes are also reviewed and entertained. So what's the objectives behind setting up the sandbox program? A sandbox can benefit all stakeholders in the financial services market. These benefits are encompassed in the objectives laid out while setting up the program. For innovators, startups, and companies, it represents a safe space to innovate, removes ambiguities concerning the regulatory framework, reduces time and cost of getting innovative ideas to market, helps in assessing the viability of an innovative product to be launched on a full scale. Then for regulators, it increases SECP's understanding and enhances its capability to facilitate and regulate a range of fintech innovations, test existing regulatory framework against new technologies and business models, and determine a conducive regulatory environment for innovation. The benefits and objectives are not limited to the regulator and the innovators only. For end consumer, we think that it tests the adequacy of risk mitigation measures and also ensures that proper consumer protection safeguards are in place. So how did SECP come up, and when did SECP come up with the Sandbox program? SECP's Sandbox program was established to harness technological innovation to the benefit of both entrepreneurs and consumers in the SECP's regulated sectors. The enabling guidelines were approved in November 2019. These guidelines provide an enabling framework for testing of innovative business models in the financial service market to facilitate financial inclusion, development of innovative and competitive financial markets, market and regulated entity growth and development, and it promotes effective competition and growth of the regulated financial services through disruptive innovation. So what exactly do these guidelines state? The guidelines facilitate participation in the sandbox. They cover in details regarding who can apply, what is the procedure for submitting an application in the sandbox program, what can be tested, that is details of potential categories, business models that can be tested, criteria on which applicants shall be assessed to qualify for testing, various stages of the sandbox program, and lastly, but very importantly, potential terms and conditions that can be imposed as a prerequisite for testing. As mentioned earlier, SECP's Sandbox by design runs on a cohort basis. A particular cohort from the opening of the application window to the final closure, that is submission of the report by participants, spans more or less over a year. The application window opens for almost 4 to 6 weeks, usually in the first half of the calendar year. Preliminary and detailed evaluation is completed in 4 to 6 weeks, respectively. Incubation period of around 8 weeks is allowed to the selected participants. The testing window spans for over another 24 to 36 weeks. And lastly, the testing participants submit a report within 4 weeks of the closure of the tests. The big question, who can apply for the sandbox testing? SECP's sandbox is open to all who have an innovative solution. Whether you are a tech-savvy individual or someone representing a startup or a company or an entity operating under license in any of the regulated sectors. If you have a tech-based innovative solution, then you are eligible to apply in the sandbox. Another question that comes to mind is, why should you apply? What is it in it for you? For innovators, startups as companies, it represents a safe place to innovate, removes ambiguities concerning the regulatory framework, reduces time and cost of getting innovative ideas to market, helps in assessing the viability of an innovative product to be launched on full scale, provides a structured process to strengthen dialogue and interaction with the regulator, helps in making the product services more attractive to the end consumer. Just a quick reminder, the Sandbox program has entered into its third year. The first cohort under this regulatory sandbox was announced in February 2020. Amongst 33 applicants in the first cohort, 6 were selected and participated in testing and experimentations. Life cycle of the first cohort has been completed. The results have been shared in form of a position paper, which is available on the Commission's website. This slide gives brief details about the participants of the successful participants of the first cohort. Finja Lending Services tested their P2P lending platform. They graduated from the sandbox, and the platform now continues to provide services under lending NBFC license. Whereas Finox Alpha and YPay have also had successful test runs of robo-advisory and digital distribution solutions. They too have expressed their intention to continue commercial operations as duly licensed distribution and advisory companies. PINIP, who were testing equity crowdfunding platform, on the other hand, was unable to attract investors to crowdfund any of the projects showcased through the platform. Another participant, Vada Digital, opted out of testing at the very onset and acquired a license to operate as an insurance broker commercially. And lastly, First Digital General Zakaful also successfully tested digital microinsurance and are awaiting promulgation of regulatory framework to launch full-scale commercial operations. Coming to the second cohort. The second cohort under the regulatory sandbox opened in April 2021. Amongst 38 applicants in the second cohort, 6 are participating in testing right now. Testing and experimentation phase of the second cohort is ongoing. The participants of the cohort 2 are Salam Takaful. Salam Takaful is a licensed insurance company who is testing a digital parametric crop insurance product in the Sandbox program. Frac Estate and MyCasar are both testing their business models and platforms for asset fractionalization. Sahil Software Solution is testing an eKYC solution with added facial recognition and document verification feature. Innovist is testing a unified platform for eKYC, distribution and investment in mutual funds. Uran is testing a female-centric mutual fund distribution and investment platform. It is unique due to the fact that it is a solution by the women for the women. Here, I would like to add that SECP has announced time and again that women inclusion, to enhance women inclusion and participation in the sandbox, special preference is going to be given to solutions that are being presented by female innovators. So what have we achieved as a result of these cohorts so far? Results of the first cohort has provided a direction to SECP with respect to adoption of and testing financial products and providing regulatory framework. Regulatory reforms in the following sectors within the domain of SECP are being introduced. P2P lending, that is person-to-person lending. Amendments in NBFC regulations have been proposed to provide a comprehensive enabling framework for P2P lending. Mutual fund digital distribution and robo-advisory. Guidelines have already been issued encouraging use of fintech for distribution and advisory purposes. Digital insurance in the takaful. Regulatory framework to regulate micro and digital-only insurance has been enacted and shall be promulgated in the near future. Equity crowdfunding. Amendments in the Securities Act 2017 to formalize regulatory framework for equity crowdfunding in Pakistan has already been proposed. Asset fractionalization. SECP, in a proactive step, has alongside allowing participants to test solutions pertaining to asset fractionalization in the second cohort, has also published a concept note on asset fractionalization. As of now, the concept note is open to public comments. Next. Right now, SECP's Regulatory Sandbox Cohort-III is open and taking in application. Applications can be submitted till May 31st, 2022. Oh, sorry, June 14, 2022. Applications can be submitted online at a dedicated email address, which we'll be sharing on later. It is sandbox@secp.gov.pk. In my opinion, being aware of the screening criteria and modeling your solutions and applications accordingly increases your chances of being selected to test in the sandbox manifold. The following are the 5 basic pillars of screening and evaluation process. Is there something new in the proposed solution in general or in the Pakistan's perspective? How does it serve the cause of financial inclusion? How can consumer benefit from it? Is your solution ready to test after 4 weeks of incubation period allowed to successful participants? How do you intend to roll back once your testing is complete? So prior to submitting an application for testing, I think any innovator or a startup or a company should themselves ask these questions, and I have an answer for that. Coming to the final selection and communication thereof to the participants. Though testing is done at light of the regulatory framework, however, certain limitations and conditions are and can be imposed at the time of the approval to mitigate risks and protect customers. These may include limits on the number and type of customers, limits on transactions or volume of business, Further safeguards embedded in the approval conditions may include having a customer safeguard plan, obtaining informed consent of customers, having a grievance handling mechanism, having data protection and information security measures in place, having a threat mitigation plan in place, ensuring the solutions related to Islamic financial services are consistent with the prevailing Sharia standards. Once in testing phase, which includes both incubation and testing time, the participant is required to provide monthly reports to assess the progress to date. A format of monthly report is provided to each participant. These reports especially focus on impediments being faced by them. Similarly, at the end of the test, the participant is required to file a completion report, which details the overall results and statistics, as well as a comparative analysis of the defined objective vis-a-vis the actual results. What can a participant expect from SECP during the testing time? The relevant sector specialist from SECP's team is the primary contact point for the testing participants. If required, queries and requests of the participants are forwarded to the Regulatory Sandbox Committee. Through these contact points, the participants can seek guidance from SECP anytime during the testing or at the exit point, as the case may be. Just so, if anyone is interested to apply, this slide gives the expected timeline for Cohort-III. The application window closes on June 14th, 2022. Preliminary screening results would be communicated within 30 days of the closure. Detailed review and communication on final selection or otherwise would take another 45 days. As a practice, the applicant shortlisted after the preliminary screening are called in to present their solutions before the Sandbox Committee. Testing time spans almost 6 months, which can be extended to 9 months, given the circumstances of the participant. The cohort closes with the submission of the reports by respective testing participants. Okay, now I'll be handing over to Ms. Najia Ubaid. She heads the primary market development department. She'll just throw some light on the opportunities in the securities market vis-a-vis tech-enabled products. Over to you, Najia. Thank you.
Thank you, Amina. So as mentioned by Amina, that Sandbox is open and the deadline has been extended till June 14th, 2022, and during which you can the participants can submit their applications via email address to SECP, and they can also physically drop in. The applications that can surround in terms of the area that governs the securities market, we have broadly thought of these as the focus areas. Definitely there can be any area that can bring in disruption in terms of bringing in efficiency in processing, bringing in automation in the existing processes, or bringing any concept that can be covered under the domain of the Securities Act and falls under the scope of the Securities and Exchange Commission of Pakistan can be submitted to SECP. So a few of the elements that we have tried to address is like there can be a solution in terms of fintech-based alternate platform for debt instruments. So if there is a platform that can cover the debt issuance in any form or provide an alternate platform that is based on the fintech, any technology that is supported, technology-based solution that can be submitted to SECP. The other model that can be adopted is fintech-based women inclusion in ETFs. Again, ETFs is a space where a lot of work can be done. And if the solution is specifically focused on bringing in women and enhancing the women inclusion, that can also be submitted under the sandbox. The third priority area is alternate credit scoring models, or anything related to credit scoring that is bringing disruption, bringing automation, or is innovative by its own sense. Models bringing efficiency through automation in regulated activities. Again, the purpose is that anything that can result in time efficiency, that can result in automation, that can enhance transparency, these all can be brought into and considered as a sandbox applicant business model. Fractionalization of real assets. We at present are testing the fractionalization of the real asset, that is the real estate. On the basis of same, as Amina has already mentioned, that we have issued a concept note on the asset fractionalization thing. If the solution that you intend to bring is divergent or is different from the existing concept note, or is bringing another different class of asset to be fractionalized, the participants can, or they can apply for the sandbox as an applicant. Here, I would just like to re-emphasize that the model can be from any area that is governed under the Securities and Exchange Commission of Pakistan purview, but it should clearly explain what is the problem statement, how the model is addressing that problem, how do you think that solution that you are bringing will bring in either automation, efficiency in processing, or is altogether a different business model that need to be explored, how the success of that can be measured, how the financial resources for the same business model can be deployed, what type of risks does it carry. So if each and everything of these elements is covered in the sandbox application, it will be entertained for evaluation. From the securities market side, perhaps these are the areas that we thought and we considered as kind of focus areas. And I have time and again mentioned that any solution that can be classified as an activity under the purview of SECP can be submitted. I would like to hand it over back to Amina.
Thank you very much, Najia. I'd like to invite Mr. Zeeshan to throw some light on the opportunities with respect to NBFIs.
Assalamu alaikum. I'm Zeeshan, and I work with SECP's policy side for NBFCs as additional director. It's really a pleasure to be here on this forum. While the third cohort of Sandbox is open for any innovative new ideas that meet the specified criteria under the guidelines, for the NBFC space, we have listed down 3 ideas that we think might be of interest to you and can be tested under the Sandbox cohort. I'll quickly walk you through the first idea, which is digital asset management company. And then I'll hand over to my colleague, Mr. Sajjad to present to you the remaining 2 ideas. As you may know, an asset management company launches collective investment schemes, commonly known as mutual funds, issue units of mutual funds to the investors, and invests the funds in line with the offering documents. So a digital asset management company will be an asset management company that will provide all the asset management services from launching of allowed collective investment schemes, online account opening, to issuance and redemption of units only through digital means with minimal human intervention. So the investors, in case of digital AMCs, will no longer be required to visit any branch physically. Expanding the outreach of asset management services to the underserved areas and people belonging mostly to the low-income strata of the society in a cost-effective manner is imperative for their own growth, as well as for financial inclusion, which is a priority area for the SECP as a regulator. Digitalization is the gateway to open enormous opportunities to create convenience to the customers and provide cost-effective solutions to them. If we look at the current landscape of the asset management industry, the mutual fund industry is meager, comprises of only 371,000 customers, and it has no outreach to the underserved low-income population. The digital AMC can take the conventional asset management services from the confines of the bricks and mortar structures to limitless digital distribution platforms and cell phones with potential to reach out to the currently underserved low-income strata of the economy or the society. Thus, they can become drivers of financial inclusion using digital channels. Just like mobile banks are serving millions of customers through branchless agents, providing secure and convenient digital financial services to the masses through their digital payments platforms. Just like that, digital AMCs can also follow the suit to increase asset management services footprint substantially by using digital means. I'll just quote to you key figures of branchless banking. There are 79 million branchless banking accounts in Pakistan, and the value of M-Wallet transactions has reached to 1.8 trillion rupees in Pakistan. So with these figures of branchless banking, we can safely say that there is a huge scope for digital asset management companies as well. Initially, digital AMCs can focus on offering money market or capital protected products, which are low risk and can serve as alternate to bank deposits while generating better returns for the investors as compared to the bank deposits. The range of products offerings by the digital AMCs can be increased and liberalized over time with the experience we gain over time. The current volume of business generated by online distribution channels is very minuscule in the overall context of the NBFC sector. AMCs are mainly offering their products through their own sales teams, branch networks, and parent banks' branch networks, whereas distribution through AMCs, websites, and mutual fund digital distribution platforms is very low as of now. Although it's growing at a good pace, but still it's minuscule. So in order to provide impetus to digitalization of asset management services, it appears to be the right time to introduce the concept of digital AMCs and incentivize the licensing of new digital asset management companies that would focus on providing the services exclusively through digital platforms and applications. I would also like to share with you that right now we are at the conceptualization stage for digital asset management companies, and a concept paper will be out in due course of time, maybe in a couple of weeks' time, and it will be available for you for comments and feedback. So with that, I'll hand over to Mr. Sajjad, who will take you through the rest of the ideas that we have in NBFC space.
सजाद, आप अपना प्लीज माइक अनम्यूट कर लीजिए.
जी मैम, can you hear me now? जी, Assalamu alaikum ji. My name is Sajjad Ali, and I am an additional director with the SECP Specialized Companies Division Policy Department. And I think Aqeel Saab has already given a very interesting overview of the areas that we're targeting from the policy side and how we're trying to garner interest from investors as well, enhance the investor base. And there is no doubt that digitization and digital solutions can definitely add value in terms of reaching out to investors, expanding outreach, increasing financial inclusion. So with that in mind, there are a few hot areas in our view that can really be fruitful in terms of a combination with digitalization and digital solutions in terms of platforms and in terms of apps. So what we're thinking about right now is two key areas that I'm going to be covering. Number one is that when an investor wants to invest in a mutual fund, that mutual fund is primarily investing in a basket of securities. And the mutual fund is handling the basket in terms of, its own prerogative and the fund manager's decisions. For exchange traded funds, which is a $10 trillion industry as we speak today and continuously increasing, the idea is that the exchange traded fund tracks a disclosed, predefined basket of securities on the stock exchange, and an investor can go and purchase a unit that represents a certain percentage or proportion of that basket of securities. And once the investor has purchased that unit will be mimicking the movements in prices of the underlying securities in the basket, right? So very simply, what happens is that unit, in terms of mutual funds, what you have to do is you have to create and redeem units directly from the asset management company. But for ETF units, you can sell them on the stock exchange and you can exit in real time based on real time prices. So ETFs themselves offer huge potential in terms of investors being able to gain an exposure on a much larger and much more diverse basket of securities, which they cannot individually invest in maybe, or would not want to invest in, or would not have the expertise to invest in. So, you're not dealing with the announcements and the price trackings and the corporate actions and, all other areas associated with one security. Rather, you're investing in a whole basket of securities. It could be, say, for the banking sector or the oil and gas sector. So, you can track an entire sector, or you can track a mix of diversified securities. So for ETFs, what we're thinking right now is that in Pakistan, ETFs were launched in March 2020. So still a pretty nascent and an industry with a huge lot of potential, I guess, because one area that we know is that the underlying securities is also a limited base, but now we've expanded into debt ETFs and fixed income ETFs, and now we're going into equity ETFs. So with a $10 trillion industry, there is a lot of room, globally and in Pakistan as well. So the solution right now that we're thinking is that we're going to open up the ETF market. Right now, the framework requires that an ETF, like any other mutual fund, can be launched only by an asset management company. But what we are thinking of right now is that maybe, we could open up exchange traded funds to be launched by other market participants, other institutions. For example, an institution which has some inventory of particular stocks could launch an ETF on those stocks, and then create a basket of ETF units based on those stocks. So brokers who are transacting in that stock and have liquid access to this capital market and the stock exchange and know how to trade and fill in supply and demand gaps. So they are potential applicants for the regulatory sandbox in terms of launching ETFs. So that area, and once again, if that is like Madam Amina very briefed in detail, if that happens and there is some room where the application obviously gets successful and there's a good response, then eventually we can frame a regulatory framework whereby we can enable ETFs to be launched by other than asset management company capital market participants as well. So coming to the last point, this is another area where I think, digitalization has always contributed in terms of, say, micro insurance or, micro lending. So any area, and then Madam Najia also touched upon the concept of fractionalization. So what we're looking at today is that electronic money institutions, we have about 10 to 12 which are licensed by the State Bank of Pakistan. They've been making great inroads through digital wallets, like Aqeel Saab explained, so I'm not going to get back into the figures. But the main thing that we can see here is that EMIs are making inroads into outreach and tapping segments that were previously untapped by the banking sector. Then we have a whole distribution network that the SECP is administering through securities advisors, future advisors, and distributors who are distributing units of mutual funds and voluntary pension schemes. So all these players, what we are thinking is should be enabled to allow even small investments that could maybe get a fraction of a unit of a mutual fund. So rather than getting, say, a unit of a mutual fund which is priced at 500 rupees, maybe there could be an option where the investor can invest 10 rupees or 20 rupees or 50 rupees into a unit of a mutual fund. And over time, maybe they can accumulate more units as they deem fit, or they can capitalize the investment, the minimum investment that they've already made. So that is also one area that we're looking at, and we're hoping to encourage people to apply in these areas. And we're open to obviously any other areas as well, but these areas I think we could get maximum facilitation from the SECP in terms of, because we've shortlisted after a lot of brainstorming and come to conclusion that these areas really have a lot of potential, and they could prove very fruitful. That's it from my side. Thank you very much, and over to Madam Amina. Thank you.
Thank you very much, Aqeel and Sajjad. I'm sure that the participants will find your explanations very informative. Now I invite Sabahat to shed some light on products related to the insurance sector.
Thank you, Ma'am Amina. So my colleagues elaborated very well on the objective of rolling out the regulatory sandbox guidelines. I would just start with summarizing a few of the objectives of introducing these guidelines in the first place. So the objectives of introducing these guidelines back in 2019 were financial inclusion, improving the customer journey, accessing new customer segments, and enhancing the investment in the country. So as long as your application has covered these points, there's a good chance that that will be considered. So few of the potential areas for testing in insurance are here. Number one is on-demand insurance products. One of the example of this product is flight insurance, which means that this is the type of insurance which covers certain risks which are faced in certain special situations or moments. So when you onboard a flight, you can turn the coverage on, or when you get off the plane, you can switch it off and you are charged only for that duration. So this is one of the example of on-demand insurance product, and testing can be done in this area. The second area in which testing can be done is artificial intelligence-based insurance underwriting. Analytics from different data sources can be used for creating a better risk profile of different customer segments or even individuals. What can be those data sources? That can be social media, that can be news, or that can be third parties. Now, this is something for which there's a lot of room for work in Pakistan, because there is no national data protection law in Pakistan. So, the field is quite open in Pakistan for this area of work. Third area in which work can be done is automated insurance claims processing, also powered by artificial intelligence. In this area, a machine is taught that what are the indicators for claim acceptance, what are the indicators when claim should not be accepted, and when there is an ambiguity, the claim can be escalated for human judgment. So this is also one area in which claim automation can be done, leading to improved customer journey. The fourth area is automated claims assessment, but this is rather different from AI-based claims assessment. In this type of automated claims assessment, claims are processed on the basis of predefined criteria or parameters such as rainfall or temperature or price of a certain component or crop, or even water level in river or sea. Parametric insurance is one of the application of this sort of automated claims assessment. Another area which is very important and of lot of interest for us right now is peer-to-peer insurance. In peer-to-peer insurance, like a lot of individuals come together to pool their capital for self-administering and managing their insurance risk. So the contributors of capital are the policyholders and also the owner of this mutual entity, which is the peer-to-peer insurance entity. Mutuals and cooperatives and even the COHORT currently operates on this principle. Although in Pakistan, they are currently required to be licensed. First, they are required to be registered, incorporated as public limited company. Then they are required to be licensed as life or non-life insurer under the primary insurance law, which is insurance ordinance. But this is one area in which regulatory sandbox testing can be considered in view of the fact that individuals can mutually mitigate each other's risks through little contribution and contribute to closing the protection gap and enhance the financial inclusion. So this is one interesting area for regulatory sandbox testing, given that there is ring fencing and there is something to fall back upon in case the capital contributed by the policyholder falls short of paying claims. And the sixth area is telematics for improved insurance pricing and customer experience. Telematics is the device which helps in tracking the driving behavior. So if a person is not a good driver, if a person does rash driving, that person drives in areas where the road is rocky and hilly, or drives in areas where the weather is not so good, that person is likely to be charged a higher premium. And on the contrary, a person who is rather a safe driver and drives in localities which are safer comparatively is likely to get better pricing. Yeah, so that's how telematics work. And this is also called pay how you drive. So this can contribute to risk-based pricing and customized price insurance policies. Or any other area in insurance value chain can be submitted for regulatory sandbox testing, and applications can be considered on the basis of degree of innovation or contribution to any of the regulatory sandbox guidelines objectives which are stated in the guidelines. Thanks.
Thank you very much, Sabahat. That was very nicely done. You've explained in detail and in very plain terms of what sort of products that we are interested in as regards insurance. I'd just like to reiterate that regulatory sandbox guidelines are available on the SECP's website. The web address of the site is www.secp.gov.pk. Other than the regulatory sandbox guidelines, there's a position paper also placed on the website, which shares the experiences and key learnings from the tests conducted and finalized so far. You are also basically encouraged to follow us on the social media accounts, where we are actively updating this and putting in posts regarding the sandbox activity at SECP. Furthermore, for application submission or any query, our central email address is sandbox@secp.gov.pk. At the end, I'd like to thank all the participants of the webinar. And thank you very much. Over to you, Umair.
Thank you so much, Amina. That was a very informative session. We have a couple of questions. One is regarding the deadline. I know it was on the slide, but maybe we could give a little further clarity on the deadline.
The second cohort application window ends on June 14th. Oh, sorry, the third cohort application window ends on June 14, 2022. And okay, you can submit your application through email, which is a preferred mode, but it can be submitted in a hard form as the applicant wished.
Okay. So there you go. About a week left to apply, everyone. Another question we have is, are applications being accepted for crowdfunding platforms?
I think, Najia, if you could take that question.
Yes. So we are accepting all types of applications that are under the ambit of Securities and Exchange Commission of Pakistan. But just wanted to clarify here that equity crowdfunding has been tested in the first cohort, and there are certain restrictions when we are testing in the sandbox. So those restrictions emanate from the private placement rules 2017 that are in place, that says that for doing any publicly open equity crowdfunding, you have to actually publish a prospectus and follow a very detailed and a kind of a cumbersome process. So these are the restrictions. But if you think that your model, equity crowdfunding model, is kind of disruptive and is different from the one that was proposed earlier in the first cohort, do submit your application. It will be considered, and you will get response from us in case it is accepted for the testing environment.
If I could just add, we are very open-minded about the applications that we receive. So I think any sort of an application is welcome, and it will be basically reviewed and evaluated independently.
Wonderful. And could you also share a little bit about the requirements, maybe just a little bit more on the requirements to apply?
Well, the requirements to apply are given in the guidelines. They basically, there's a form in the guidelines which basically require the applicants to provide an overview about themselves. If they're incorporated, if they're in the incorporated form, maybe their name, the registration number. There's an application fee of ₹5,000 that can be deposited online, and then their solution that they're proposing. What is the solution? What is the problem statement that they're addressing? What's the technology on which their solution is based? How do they intend to finance their tests? Whether their solution is in place, whether it's ready for testing. Because as mentioned, we provide a 4 weeks window for incubation period, but we expect that any applicant who is shortlisted is ready to test its application within that 4 weeks.
Absolutely, that makes complete sense. And I see that the guidelines have been shared here in the chat as well. For anyone who's curious, you may click and download the PDF document. And on that note, I would like to extend my thank you to the entire team at the SECP for doing these sessions regularly for our startups and wider community. And thank you so much, Amina, for hosting this session. For everyone who joined in today. Take care, and Allah Hafiz.
Allah Hafiz. Thank you very much.
Thank you very much. Goodbye.
Thank you. Allah Hafiz.